For those that don't know me, my name is Angie Jones. I'm director of the Family Business Center at the University of Toledo. Thank you everyone for joining us. Today we have the William Vaughan Company. We have Pam and Kate Matz are going to talk to us. Well, like I said, we have a lot of stuff we're going over today. We're going to talk about the PPP2 and compare that as to one, everything involved with that. We're going to go over employee retention tax credit. That's a big issue these days. And then we're going to talk about some other tax changes on the docket that you need to be aware of. If you haven't been on one of our webinars before, we will ask everyone to mute themselves, or Emily will mute you. And it's helpful if you keep your video off. If you have any questions, utilize the chat feature if you don't know how to do that. Although I think we're about a year into Zoom now, so I'm guessing everyone knows how to do this. But if you hover towards the bottom, there's a little chat box. You can click on that. If you have a question, use the chat feature. I will monitor that throughout the presentation. If you have more of an in-depth question, just flag me in the chat. You can send a message directly to me if you feel like you need to turn your video on and talk, and I will watch that and I will call on you. So with that, we are going to get started, and I'm going to start with Kate Matz, partner with the William Vaughan Company. I'm going to let her take it away and start with a PPP2.
All right, thanks, Angie. Well, welcome to everybody. Happy to be here with you guys today. As Angie mentioned, we do have a jam-packed hour full of some really important topics to talk about as far as updates to PPP and employee retention tax credit. We do hope to get to as many questions as possible at the end, just given kind of the length of the content and time restraints. If we don't get to your question during this, we do have an ability to stay over a little bit extra. And if we still don't get to it, we will reach back out to you afterwards and make sure that we capture all of those. So no worries there. As Angie said, my name is Kate Matz. I'm a partner with William Vaughan Company. I lead up our advisory services or consulting practice. I've got a background in audit and corporate finance prior to focusing on the consulting and advisory space. So I've been leading up a lot of the efforts on the firm's PPP response going back to last March, and it's been a very interesting past almost year now for all of us. So I'll kind of do my best to bring you up to speed here. As we move into talking about PPP loans, I'm going to focus a little bit more on just the kind of changes that have happened. So we want to make sure we give enough time to go over this employee retention tax credit. It's a topic that hasn't gotten quite as much attention as it really should. There's definitely some real benefit there that has gone a bit unnoticed. So I'm going to focus the PPP topics more on the changes, not diving down into too many of the nuances, but again, feel free to reach out with any specific questions that you do have. So first off, some headlines as far as what has recently changed. So back at the end of December, so it was December 27th actually, we had a new law that was passed and then signed on December 27th under the Consolidated Appropriations Act that made some changes to the existing PPP program. So it opened up a third round of the PPP program that had been already in place throughout 2020. Made some changes that were all very beneficial to borrowers. And it also then created a new PPP2, which is a second draw. Kind of how we'll talk about this is PPP1 is if you are getting a first draw loan, and PPP2 is if you are getting a second draw loan. Along with that, there were some changes to forgiveness. So the first one there is bolded. We got deductibility of the forgiveness and the forgiveness related expenses. So that was a really big deal, and it had kind of been going back and forth throughout 2020 as far as where that was going to land. So again, a really favorable outcome there. We did also see some additional expenses become eligible for forgiveness. We got some streamlined forgiveness for loans not exceeding $150,000. And then we also got a nice benefit of EIDL advances no longer offset your PPP forgiveness. So you get that full amount of forgiveness. So we'll go into these in a bit more detail here, but I did just want to hit up some of the headline changes first. So to help kind of get our mind around what is PPP1 and what is PPP2, how are these things similar, how are they different, we've got our PPP umbrella here. So PPP1 first started out with the CARES Act. So again, that was going back to March of 2020, that really, really big initial stimulus bill that was created. And under the CARES Act, PPP1 was eligible for most employers less than 100 or less than 500 employees. You did have to be eligible for an SBA 7A loan. The max loan amount there was $10 million. And then we had a first round and a second round of funding become available for the PPP1 under the CARES Act. So that basically allowed people to apply at the end of March through the very beginning of August of 2020. So now under the CAA, that Consolidated Appropriations Act that was passed in December, again, we had this new round of PPP1 funding open. So this third round of PPP funding, it opened in January. It goes through March 31st of this year. And it also expanded the eligibility requirements a little bit. We brought the 501c6s into the fold now, whereas they were previously not eligible to apply for a PPP loan. Comparing that then to PPP2, again, this was the new one that is created, and this is the second draw loan. So here we've got a much more targeted, much more focused program. So this now is looking at, you need to have 300 or fewer employees as compared to the 500 under the first draw loan. And you also have to show that you have at least a 25% decline in your gross receipts from a 2020 quarter compared back to that same quarter in 2019. You do also need to use fully your PPP1 funds, and the max loan amount here is a $2 million loan as compared to a $10 million loan. So the structure and the foundation is very, very similar between the two. But we do have a little bit of a different rules as far as a more targeted eligibility and then that lower maximum amount. So what we've got here now is our PPP loan application guide. And this is a bit of a roadmap that we put together to kind of show people just big picture, what are the steps that you need to consider and go through in looking at a PPP loan. So let's walk through these steps here. So the first one is to determine, have you already gotten a PPP loan? So if you have not already gotten a PPP loan, you're eligible for PPP1, that first draw loan. Again, that has that wider range of folks that are eligible. If you have already gotten a PPP1 loan, now you're going to look at, do I qualify for a PPP2? A couple of other important points here. This is opened up now so that in some certain circumstances, you can go back and request additional dollars on your PPP1 loan. So there were some changes that were made to the guidance along the way, and people that have been following it know that that's a bit of an understatement. There were a lot of changes that were made very frequently along the way with PPP1. But some of those changes had to do with how you calculated the loan amount, particularly for partnerships and for seasonal employers. So if you had calculated it initially in a way that gave you a lower loan amount than you ultimately became eligible for because they changed the rules, you can go back and request those additional funds. Additionally, if somebody got a PPP loan and returned it because they just got nervous about some of the uncertainty that was going on for a while there and some really bad press, there's a do-over provision that you can go back and actually request to get that funding back. These do not cover if you simply made a mistake in your calculation for requesting your loan amount in PPP1. So there are some options there, but they are pretty narrow to a rule change, or you actually gave the loan back the first go around. All right, so once you go through the first step and determine, are you going the PPP1 route or the PPP2 route, Now we'll look at step 2. And so again, we're kind of laying these things out side by side so you can see just how similar they are and also point out where the differences are. So if you're going down the path for PPP1, eligibility criteria, we went over or touched on most of those. So again, you need to have already been eligible for an SBA 7A loan. New is those 501c6s. And you also need to have this economic uncertainty. So you need to certify that there are uncertain economic conditions that make it necessary for you to get that loan in order to remain in business. One note here on how you count employees. And so there's different definitions that are used when we talk about employees through all of these things. For the loan application, when they talk about the number of employees, this is a straight head count of who's on your staff. It includes full-time and part-time employees. Now looking over at PPP2, again, this is where the eligibility criteria gets more narrow. So now we have the 300 employee threshold. We need to show that 25% decline in quarterly gross receipts. And this is a calendar quarter. So you'll look at a calendar quarter in 2020, compare that back to the same calendar quarter in 2019. And if you have at least a 25% decline there, you become eligible for the PPP2. The other note then is that you must have fully used your PPP1 loan by the time that your PPP2 loan is funded. So what that means is if you haven't already gotten a PPP1, you can't go and apply for both right now. You need to have used up those PPP1 funds first before you get your PPP2 loan. We still have to make that same economic uncertainty certification that you need to do along the way with PPP1. One note then on this gross receipts test. So when you're looking at this gross receipts and revenue, it is pretty all-encompassing as far as how you typically record your revenue on your books. So most things kind of coming in from sales or you know, any sort of other receipts that you've got coming in, but it does not include the PPP1 funding or forgiveness, and the same thing with EIDL. That is not included as part of your gross receipts. All right, moving then on to number 3. So the third step then is going to be to calculate your loan amount. So in both cases, if you are on the path for PPP1 or PPP2, it's going to be based off of your average monthly payroll. So you're going to be looking at your average monthly payroll. And if you're on PPP1, you can use 2019, 2020, or the prior 12 months at the time that you apply, and come up with that total 12 months worth of payroll and then divide it by 12 to get your average monthly. For PPP1, you're going to multiply that by 2.5. For PPP2, if you are in the accommodation and food service industry, so think restaurants, hotels, you actually get to multiply that by 3.5 to determine your loan amount. So again, we've got a cap of $10 million on the PPP1 loans and a cap of $2 million on the PPP2 loans. Additional note here, when you're gathering up those payroll amounts, remember that each employee's payroll is going to be capped at $100,000 for the year. All right, now that you've got your calculation done and you've determined the amount that you are eligible for, the last step would be to go ahead and apply with your financial institution. So for PPP2, you can continue to use the same lender that you used for PPP1 if you liked, and if that worked out well. You are not obligated to do so. So if you have a reason why you want to make a switch for PPP2, you do have the ability to go ahead and do that. So most, most lenders that we've seen have their PPP2 applications up and running now. All right, so we're going to move on now to forgiveness and highlight some of the changes that happened with forgiveness as we kind of walk through the steps of our forgiveness roadmap. So much like the prior roadmap, where we walk through what are the steps to actually apply to get the loan, we've got a roadmap here on, all right, on the back end, what are the steps that you need to take in order to get that loan forgiven. First step is determine your covered period. So new with the CAA, you can choose any length of time between 8 and 24 weeks. You used to have to pick one or the other. Now you have some flexibility to choose any period of time in between those two. Moving on to step 2 then, you're going to calculate out the total eligible cost. So we've got payroll included in here, and payroll needs to be at least 60% of those total of that total loan amount that you got in order to have full forgiveness. And an important point here, which Mike is going to go into more detail, but I'll mention briefly, is when you include your payroll cost for your PPP forgiveness, you got to take a look at if you're also taking that employee retention tax credit. You can't double dip and use those same payroll dollars for both of them. So there's some strategy and some planning to do as far as which payroll dollars you include where to maximize both of them. So like I said, Mike will go into some more detail on that, but that's payroll. And then you also have the eligible non-payroll cost. So back initially with the CARES Act, our eligible non-payroll costs were rent, utilities, and then mortgage interest. Now with the CAA, we have some additional eligible non-payroll costs that can be included. So we've got operations costs. So think cloud-based software, so any software or cloud-based services that you're paying for that helps you operate remotely, that is an eligible cost now. If you did incur any sort of property damage due to some of the unrest and public disturbances that happened during 2020, the repairs to those are an eligible expense to the extent that they're already not covered by insurance. Supply costs is another one, and I think this is one where I'm seeing folks be able to use pretty significantly. So anything that you're buying that's essential to your business operations and you had a contract or even a purchase order for before your covered period, so before getting your loan, you can include those payments as part of your eligible cost. Now, if you are somebody that buys perishable goods, you actually don't even need to have that contract in place before your covered period. It could be in place anytime during that covered period. The last new eligible additional covered cost is for worker protection. So any cost that you incurred to make it a safe environment for your workers or for your customers, those can be included as well. So think things like PPE, face coverings. If you did anything with health screenings and checks, put up any sort of temporary structures for that. Adding drive-throughs for restaurants, adding additional space so that you can properly space people out, whether that be temporary or permanent, indoor or outdoor. Anything that you did in order to create that safe environment based on government guidelines would be included in this worker protection. And this could be operating or capital expenses. So again, a pretty broad definition here. All right, then once you've gone ahead and put out the total eligible cost, now you need to look at the percentage of those, right? So I mentioned before this payroll being 60% of the total loan amount requirement is still in effect. So you're going to look at all those eligible costs, but in order to get full forgiveness, you need to have at least 60% of your total loan amount being covered by payroll. All right, moving on to step 4 then. Now you get to file one of the options of a simplified form versus going down the route of the full forgiveness form. So new with the CAA, there's a simplified form for any loans not exceeding $150,000. It is a one-page application. Not too much to fill out, number of employees, what your loan amount was, how much you spent on payroll costs, and then the amount that you're requesting for forgiveness. So you don't actually have to go through and show all of your math as far as these FTEs and compensation reductions and all those other things that you may have heard about before. But it's important to understand that this is not some sort of automatic forgiveness. You still are certifying when you sign that you have met all of those requirements. So technically, you should still kind of be going through that math and having that documentation in place. 4 years for employment records, 3 years for other records, in case the SBA does come back and audit that. So it is, again, it's not an automatic forgiveness for loans under $150,000. It is a streamlined form, however, but you are still certifying that you have met all of those requirements for PPP and forgiveness. Now, if you're, oh, go ahead.
Real quick, can lenders refuse to offer the simplified form?
No, they cannot. They should not. If they are, I would be kicking and screaming. So no, this is part of the law that's in place, and the form is available through the SBA and Treasury. So lenders, if they haven't made it available yet, it could just be a bit of a time lag as far as working through all of the changes, but they absolutely should be making that available.
Okay. One quick kind of situational question. So if there's a defined benefits plan, or frozen, and they did not include quarterly mandatory contributions to the plans as payroll cost in the first round of PPP, is this something that they can go back and do?
As far as calculating out their PPP requested loan amount, you're asking?
I think so. So Thonda, if you want to unmute and jump online and maybe clarify that question.
Yes, we have 2 frozen benefit plans, and during the process of coming up with our monthly payroll costs, because defined pension plans are still rare these days, we excluded it because we couldn't get answers on what we can include and what we couldn't include for the first round. So we just chose to exclude it.
Okay.
Just to help the process go through. But now that you can go back, it is part of our payroll cost. So I don't know if that's something I can go back to.
Yeah, so the definition of payroll does include the employer retirement benefits, so payments that the employer would have made. So you should be able to go back and include that as part of that 12 months look, and then do the math of dividing by 12 and multiplying by the 2.5 or 3.5. Yep.
Okay, thank you very much.
Sure.
Okay, that was it.
Okay, go. Let's see here. Okay, the last point that I wanted to make here on looking at this loan amount to determine if you have a simplified form available to you is that for loans that are less than $50,000, you still use that same simplified form as for loans less than $150,000, but you actually are exempt to the FTE reductions and compensation reductions if you have a loan that's less than $50,000. So it is almost like automatic forgiveness on those, in that you do not need to actually go through the math on those and prove that out. They will never come back and ask you to prove that you've met the FTE and compensation requirements if you have a loan less than $50,000. All right, so if you do not get to use a simplified form because of your dollar amount of your loan, the next step would be to look at, do you get to use the EZ form based on the other criteria that you had kind of throughout the time of your covered period. So this has been out there, no changes to this, but quick reminder, the EZ application is available to borrowers of any size of loan. But you have to meet the criteria of being able to show that you did not reduce your full-time equivalents, or if you did, the reason that you did was because of a government mandate or guideline. And you also need to be able to prove that you did not reduce the levels of compensation to your employees by more than 25%. So this isn't the dollars that you're paying, but actually the rate that you're paying. So that's kind of an important distinction. All right, so if you've gone through those and you are not eligible for any of those simplified or easy forms, you move on to step 6. And here's where you have to go through that full-blown calculation of looking at wage reductions and FTE reductions. I won't get into details on that, but if you do have any specific questions, let me know there. And then step 7 would be to go ahead and apply for forgiveness kind of once you've gone through all that math. So quick reminder, the forgiveness amount is going to be the lesser of the PPP loan amount received to begin with. That 60% payroll requirement that we calculated back in step 3, or those eligible costs that you'd have. Reminder then also, this forgiven amount is not taxable with the CAA. This is at the federal level though. So the state of Ohio has not yet decided to go along with that. So if this is important to you, I would suggest reaching out to your local lawmakers that are in Congress making those rules, and our state house, our state Congress, and let them know this is important to you, that you want the PPP forgiveness to not be taxable at the state level, just like it's not taxable at the federal level. Owners of pass-through entities will also get the benefit of the basis increase for the forgiven amount. And again, no longer the reduction by the EIDL advance. Again, that EIDL was the economic injury disaster loan, and you were eligible to get an advance on that, which was a grant. Previously, that grant amount, if you received it, would reduce your PPP forgiveness. That is no longer the case. So if you've already gotten your PPP-1 forgiveness and they reduced it by that EIDL advance amount, your bank should be refunding you that money along with interest as soon as they're able to kind of go through the process and get those calculations done. Okay, so that was a lot of information in a short time, and I want to be able to hand it over to Mike to talk about the employee retention credit. I will let you know we've got a COVID-19 resource center out on our website that has both of these roadmaps that we looked at, blog posts diving into some more depth of some of these topics. We also have video shorts that go into some more information, and we've got calculators, so Excel calculators that will help you determine your loan amount as well as your forgiveness amount. So lots and lots of resources out there available to you. And again, feel free to ask us any questions as well.